Okay, let's see if we can get a Q&A session behind us for the market outlook from June 1st. We will start on Discord. And by the way, there are only a couple of weeks left on YouTube before I just shut off the comment section. We did have a big enough push to drive people to Discord. Are you still looking to build a momentum portfolio that you mentioned recently? Yes, it's just you need a momentum candidate. Oops, I didn't mean to move that. There have been no momentum candidates as of yet. There are certain rules. So there is a channel for momentum. If you scroll down the channel side, you'll see the rules. And it's $1 million. I put aside 1 million. And any stock that appears on the momentum list, I will simply buy $10,000 of. And we will have exit rules on both the upside and the downside. And that's it. We'll see how that portfolio does. Based on your learning so far, do you see a risk of AI ever becoming sentient? No. For that, I really do think you need biology. Some biological entity. I don't know that code can ever do anything more than process code without there being some biological function in which you can achieve something called an emergent property. I don't know that you're going to actually get that with code. Any property that you get with code can be reduced to its parts. I don't know that you can create a true emergent property that way. And without that, I don't know that you're going to get that level of sentience, because that is a property that emerges at the level of the whole. I'm currently training my children combat techniques, survival skills. Well, they don't have to be sentient to kill you, right? You can think of security bots. They simply just have to be big and heavy and bulletproof, and maybe they're equipped with laser focused weaponry. I don't know, but I don't know that you need to be sentient. You need to be programmed to attack. In addition to writing code, calculations, and research, I've also been using ChatGPT to better understand my cat's behavior, and so far it has been really good. Behaviors I thought that were my cat's shenanigans actually turned out to be bonding and attention-seeking behaviors. This made me wonder, do you think if more and more people turn to AI to sort out emotions or understand certain behaviors, the experience, the demand for psychologists and psychiatrists will reduce? My understanding is there is already therapists out there. There are already AI agents that will act as therapists that you can have conversations with. Now, I don't know how good they are. I've never used a therapist. I don't know where they are, but if there is a body of knowledge out there that it can absorb, and if there is a body of knowledge around techniques that it can absorb, then at some point it could probably serve as a therapist for a lot of common everyday problems. Maybe we could all have our own personal therapists without paying $200 an hour. That might be nice. On a lighter note, maybe a cat was involved in the development of AI. From what I understand, nobody was a cat. That was my understanding, is that all of them on the resume, I am not a cat. What do we got here? How fast do you think the application of deflationary measures will ripple through the U.S. and European economies? Oof. I don't know. I think some estimates are not considering the learning process. Well, you always have a curve of learning and a curve of adoption. I think early adopters and more tech-focused companies are probably already seeing how they can either increase productivity or reduce costs. So I think that's already there. And then you have some organizations that are just saying, well, there's nothing there, or nothing there for us. In which case, they are operating just like they have before. right? So if some companies are adopting it and others are not, that is in part deflationary. We can't say that those who are not adopting it, oh, well, that's going to be inflationary for them. It will be inflationary to the extent that the economy would have been inflationary anyways. If most people get to understand, I think some estimates are not considering the learning process. Most people get to understand the fact that AI literacy will be required as they further progress in their careers. Does this mean less job displacement would occur as a result? I don't know that I would say less job displacement would occur. It would just be you're less likely to be replaced. However, if we, as I said in the market outlook, if we conceive of these as cognitive domain emulators and we revisit the hierarchy, they are very good at the recall and understanding cognitive domains. Once you get to application in well-defined tasks, they are very good, and then they sort of break down after that. So if you're simply operating at these cognitive domains, and if you're using AI, you're probably saying to yourself, holy Jesus, it can do everything I can do. If you're saying that, if you're saying this can do everything I can do, then yeah, you're probably done. Maybe not now, but the writing's on the wall. But if you're saying, this can't do some of the things I need done, I've tried, I've pushed it, and it's just not getting to where I need it to be, then it will be a tool to help you, not replace you. You mentioned AI is helping you prepare the PDF files. Yes. Does this mean we would get the sector study PDF file sooner than you mentioned before? I'm going to say yes and no. Yes, it has really increased decreased the amount of time it would take me on my own. But you still have to evaluate the output. It's not perfect. It comes out pretty good. What I would expect an average employee to produce, so I still have to go in and do a little more. However, what I've noticed is with the use of AI is that rather than producing a document that I had in mind, I can produce a better one. Right? So why not take the time and produce the better one? So in the same amount of time, I can produce something I never thought I could versus just spitting them out faster. And then it's a question of, well, what do you do with this PDF after? Right? And the goal is distribution so that you can all have the PDF. But it's something to read. And I'm finding that fewer and fewer people tend to read. That if you get all these PDFs and you drop these PDFs into Notebook LM and then you have a podcast and then you ask it questions, it's like, well, what did I do all that work for? But yeah, I am well on my way on these PDFs, faster than I thought that I could be. But it gives me the opportunity to make them at a higher level of quality than I would have before, only because of the time that it took. I believe you said mid this year or later, a couple of them would be ready to share. I've got about almost three. Two are, I think, pretty much locked down. I'm going to have another AI evaluate it. Now I need a prompt for it to be the editor so that it doesn't rewrite it. It just simply gives me editing notes based on the way that it is right now. So I got to prompt it for that. And then you do the edits and we'll see. However, I do have to find a way to distribute it in such a way that it can't be widely shared, because once a PDF is out there, it's out there. And there's a couple of countries in this world, primarily, that don't care about copyright. I'm looking in your general direction, India and China. I agree with your assessment of AI as an impressive technology that could significantly reshape the way we search for, process, and analyze data. However, I'm curious about your view on the future cost of AI services. No secret that all major AI firms currently burning through massive amounts of capital to deploy and maintain these technologies. They won't be able to sustain this level of investment indefinitely, and current pricing models don't seem sufficient to reach break-even. We assume that certain jobs will be replaced or automated. This will imply heavy reliance on data processing and computation, given that we are likely to see in the future the end of almost free trial period for AI use. That's true. How do you see this shift impacting the broader AI economy? Well, I think a pay model is definitely going to be the future. Unless these companies can find somebody else to pay for it for you. Right now, that's advertising. You get to use YouTube for free. In exchange, the companies get the advertisers to pay for what it costs to deliver the service to you. You get to use Facebook for free. In exchange, Meta sells your not your personal data per se, but enough data to advertisers so that they can target you. And we get them to pay for your use of Facebook. You are familiar with this model. Gmail is free, Google search is free, YouTube is free, Facebook, all these things are free, but somebody else is paying for it. So if we want a free AI model, we're going to have to get somebody else to pay for it. That's typically advertisers. So if you're okay with ads being served to you from the results of your AI queries, then maybe there is a model still based on advertising. I would not enjoy that at all. So I pay now. I think I pay Gemini, I pay Anthropic, I pay OpenAI, I pay Perplexity, because that's how you get Perplexity Labs, and I think that's it. I might have a fifth one. I'm not really sure. But I can easily see that I wouldn't mind, not that I'd rather have it all for free, but I wouldn't object to my AI bill at this point in time being in the range of $500 to $1,000 a month. I wouldn't object to that. Only because I massively use the output and I massively use these things in the tasks that I do. They're directly useful. I can see that these will be broken up later on. If I were Google, I would be thinking about SAT tutors, or SAT prep AI agents, $19.99 a month. High school, grade 9 AI agent tutors, $19.99 a month, so that you subscribe to all these different AI agents that you need to do certain things till you no longer need them anymore. Why have the whole AI, the whole LLM capable of teaching you the LSAT when you can carve that out and make that a separate subscription for $19.95? And the only people who pay the $19.95 are those who are preparing for the SATs. I'm not preparing for the SATs, but I'm paying a monthly fee for an LLM that can do it. Well, maybe I don't need that part of it. Think of it as the distribution of its capabilities, and I'm just buying certain parts of that distribution. So I think as time goes on, these large companies will start to see how they can start to carve up these LLMs into very particular AI agents that can do certain things for a fee. But yeah, this cost is coming. But for businesses, I'm going to tell you something. Even if I paid $1,000 a month, for what I'm getting done now, I would pay much, much more than $1,000 a month. Much, much more. This is the cheapest option. This is one of the best employees I've ever had because it costs me nothing to reject their output. It's not as if they work a whole week, they submit the report, I read it, I go, okay, I don't know what you're thinking. This is terrible. I've hired, I don't know how many people in the past. I've gone through 24 building markmeldrum.com, that claim to be experts in certain things, and you've paid out 20, 30, 40,000 before you get to the point of saying, okay, look, this is just not working. 20, 30, 40, 50,000 before you say, look, this is just not working. Think about that. But with the LLM, it's $20 a month. I task it with something. Half of the stuff it gives me, I think, okay, well, I can use this. The rest is garbage, but I didn't pay 3 weeks of labor to throw that stuff out. So for me, it's like, I don't care. Throw it out. It cost me nothing to get, really, in the grand scheme of things. Half the stuff I got was good. I'll hit the prompt and say, repeat the last prompt and get another bunch of output where 50% of it is good. Throw away the other 50%. I have no sunk cost on throwing out work, right? So even if the output is, I can throw it out. It cost me nothing. So these employees, you could say I have 5 employees, really. These 5 employees, which cost me a sum total of, maybe I'm spending $150 a month total for 5 employees. Now it's really 1 employee with 5 personalities because I give the same prompt to all of them. And sometimes Gemini is the best. Oftentimes Manus AI is the best. Sometimes Perplexity is the best. It depends, but I give them the same prompt all the time. So you could think, where am I ever going to get an employee that can give me that kind of output for $150 a month? Basically, I'm spending $1,800 a year. It wouldn't bother me if it were $20,000 a year. Heck, I paid $30,000 a year for Bloomberg, and I had to search everything myself. It didn't do anything for me, right? It just speeded up my search. That's all. So I wouldn't even mind paying $20,000 a year for all the tools. It still would be the cheapest employee and the best employee in content that I've ever had. If you have a business, if you're in business and you start getting this to do some of the tedious stuff you've done before, some well-defined tasks that just simply take a lot of your time, you'll realize how powerful these things really are in terms of what it can do for you. And you'll see the value because it solves a very real problem for me. So yes, I'm absolutely certain, because this is a real thing that solves real problems, you can price it. These guys are going to price it. These guys are going to price it. Yep. If we assume certain jobs will be placed in automated, that will simply apply heavy... Okay, we already did that, right? Questions on AI. Do you think these cognitive domain emulators will decrease the difference between the good and the great? Difference of expertise and knowledge between professionals with 10 years experience versus professionals who have 3 or 4 years. So that's a good question. One thing that I see, and I've already seen it on YouTube, where I see a video that looks like a podcast with an interesting title. I click play, and I hear the 2 voices from Notebook LM. When you generate a podcast, it's the same 2 voices. I hear it right away. I go, it's just a Notebook generated podcast. And I know what you did. You put some documents in and you said, give me a podcast, and you put it on YouTube. So I can do this myself. There's nothing of the creator in that output. So I don't know that it would make the difference between good and great smaller. I think what you're going to get instead of good and great is common and stale and great, because it will allow somebody with no experience whatsoever to write a 20-page report on quantum physics, and then generate a podcast on quantum physics and put it on YouTube, all without knowing a damn thing about quantum physics or being able to assess the quality of the output. And if that person can do it and monetize their videos, and another person can do it, and you will be saturated with the same shit. Again and again, this bland, uninspiring content that lacks any kind of character. And you'll start to recognize it here and there. You'll be reading something saying, this sounds like everything else I just read. There's no personality in here. There's no human in here. There's no experience. So I think it's going to widen the gap between the experts that are producing something and that the experts live in their work. You can feel it in their work versus everyone else that saturates the market with rehashed and reproduced content that is the same that everyone else has, that has no voice in it from the individual, no character whatsoever. So I think the good's going to disappear. I think the good will disappear. Stay with me for a second. Come back up here. Remember what I said about this PDF is that I could produce this, but I can see that I can do much, much better now. I never had the resources to do this much better, but now I do without it taking me 3 months. So what would take 3 months now takes 1 month, right? What would take 1 month now takes 1 week. But if I put this out, it would be, based on where the rest of the world was without AI, pretty good. But this would be great. But you have to be an expert to get to this level. Because if I knew nothing about the PDF I generated, I wouldn't know how to get from here to here. So it will allow me to produce really great work, whereas I otherwise would have produced pretty good work when everyone else was producing average work. And it will allow average work to be more comprehensive but bland, but lacking soul, lacking something that you read it and you start to fall asleep because it has that same sort of what's a good word for this here? Has the same kind of feel, the same sort of meter. Even though it's not poetry, let's use the word meter. It just feels like it was written in the same sort of mechanical, robotish way. So I think it could heighten the difference between great, because now the experts will be doing great work. Because the AI will augment what they can do and they'll get to levels they never thought they could get to because of the resources involved. Whereas the non-experts won't recognize that the output that they're putting out there isn't great. I don't know. You talked about increasing your critical thinking and the ability to construct your evaluation expectation in a meaningful and comprehensive way. I think to develop my analysis and evaluation creative skills, I need to read and understand and try to develop my conclusions. But with the help of AI, I am seeing less reading time and more time on inputting prompts and analyzing AI output. Well, to analyze AI output, you do have to have critical reasoning skills to go through it and determine whether or not the arguments that it's putting out hold together. It doesn't know. You have to do that. Do you think that will make me more vulnerable to probable incorrect AI output since I start to read less and miss key specific points and ideas, as AI might miss or just present very high level output? That is the risk. In the video that I had done, I had showed the progression of these cognitive domains as a staircase, right? And that as you went higher in these cognitive domains, the LLM became more of a partner. It could not stand on its own, but down here it could. However, you can't get here unless you start climbing the stairs. So you do have to be a domain expert. I'll call it a domain knowledge expert. It doesn't, AI and LLMs will not absolve you of the burden of being a domain knowledge expert. What it will absolve you of is the tedious task of all those tedious tasks of getting to that level. And then once you're at that level, whatever profession you have at that level, all the tedious tasks that are necessarily required to produce output at that level. AI can help you with a lot of that. I use AI as a good check. So I can read something, and next week on the for the video that I'm putting up for AI and finance, I'm going to show you how to use AI to do the same thing. I'm going to show you how to use different LLMs and how to prompt LLMs to do the same thing. But I'll read something, and on Monday we're going to look at a speech by Waller. We're going to look at All In Podcast. We're going to look at Friedberg's comments on AI not reducing employment or significantly adding to employment. And we're going to look at Michael Saylor. And I have certain conclusions that I reach on all three. I can put it into AI, prompt it to think the way that I'm thinking, and it will give me an analysis of those to see if I'm missing anything in my analysis. What am I missing, or am I in the right ballpark? When we put this in, stand back. Stand back. AI has a lot to say about how bad the arguments are. It goes on for pages and pages. It's actually quite interesting and humorous. Given your background in education, do you have any private investments in companies in that industry? Unfortunately, no. I wish I did, but I don't. Obviously, you own the applied level, but you're also operating that business. Curious if you're involved externally from a venture perspective. No, I am not. Curious on your thoughts on Jamie Dimon said in a recent fireside chat, he sees a risk of inflation, rather deflation. Acknowledges deflationary forces of AI, sees risk of inflation due to elements like huge global government deficits, countries rearming, shift towards a greener economy, and the accompanied spending on infrastructure. Well, I can make the case. You can have a list: inflationary forces, deflationary forces, and there are inflationary forces. You can create a list of all the inflationary forces, but there are deflationary forces, and you can make a list of all those deflationary forces, and then you can use the recent past as a guide. You had government deficits from 2010 to 2020. And Japan was flirting the whole time with deflation. Massive money printing, deflation. Always flirting with deflation. US, there was no inflation. In fact, for the period of time, there was more of a concern about deflation than inflation. But if you shut down and mess around with supply channels, you will get inflation, because you are constricting the natural flow of supply. Higher interest rates work at the level of demand. If you have a supply constraint, you can work at the level of demand all day long. Higher interest rates will not increase supply. In fact, higher interest rates probably has the opposite effect of keeping supply off the market. We live, I believe, primarily in a deflationary world because technology has found its way into all our lives in so many ways, and it's only going to get bigger, and there'll only be more. So no, I'm not on board the inflationary forces outweighing the deflationary forces. However, I'm not saying you can't make a list of inflationary forces. Of course you can. I gather you remain deflationary and see U.S. bond yields dropping on both the short and long end of the curve over the next year or so. I think the short end is an easy bet to make. The long end, I don't know. If the Fed wants to, they can control that narrative. But that would be stepping into the realm of the fiscal, or at least into the realm of the effect of the fiscal on the long end. I don't know that they want to do that. If you want the curve to come down all the way across, you need a new Fed chair. You need a Fed chair that is going to expand the Fed balance sheet and is going to get on board with what the White House wants to do, and what the Treasury wants to do is lower that curve. This one will not. You do need a new Fed chair. And some are thinking that based on what Waller's been saying lately, he's positioning himself to be that guy. It seems recently that when the short-term yields drop, the long end goes up. Well, that's not cause and effect, right? So what is the cause of the long end going up? So we have what we can say is a coincident action. The Fed cut rates at the short end, the long end went up, the curve steepened. But it was not a cause that cutting rates would increase the long end, right? So you have a coincident effect in the market, but different causes. This is the Fed cutting rates. This is the market getting very concerned, because once we got into September, the market started to get very concerned that Trump was going to win. It looked very clear that Trump was going to win, and then the thinking was he's only going to increase the deficit. that there is no clear plan to decrease the deficit. He's only going to increase the deficit because of the tax cuts, and so the long end started going up. Yeah, I don't think the long end started going up because the short end was going down. Everyone said, "Oh my God, inflation, inflation, inflation." I don't think they said that. I think they said, "Oh my God, unsustainable debt path, unsustainable debt path, unsustainable debt path." And that's really the big thing right now, is the unsustainable debt path. Sure, you have some talk about inflation, but what is it? Is it the taco presidency that Trump always chickens out, so may as well in the equity market do the taco trade? If everyone's doing the taco trade, where's the inflation? If Trump always chickens out, then there'll be no tariffs. Where's the inflation? So the bond market is not, if we're saying, well, it's inflation, what we're saying is that the bond market's not on board with the taco trade, but the equity market's on board with the taco trade. One of those two markets are wrong. Either the bond market is massively undervalued or the equity market is massively overvalued. One of those two things are wrong. But if we think that, no, they both agree with the taco trade, it's just that as Musk said today, the bill is, what was his word that he used? Well, let's just say he said it was disgusting or something along those lines. It really is just going to add to the deficit. Now, there's some thinking that over Trump's presidency, $4 trillion would be added to the debt. My estimate is if massive changes are not made, it'll be closer to about $8 trillion. And I don't think the administration really cares that much because they're good. They're taken care of. They're good. And what is it? Mitch McConnell famously once said, show me a congressman who lost an election because they spent too much money, right? Nobody loses an election because they spend too much money. That's how you win elections, is you spend money. It's ingrained in the system. Spend, 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 spend. And now you're cutting taxes. And now you think you're going to get tax revenue from the tariffs. But Trump always chickens out. But the bond market is, I mean, do you see all of the contradictions here? So when you have markets that are giving you this much contradictions, that means that the story the market is saying is something different than what everyone else is thinking. And the thinking, I think, is there will be deficits. Now, deficit spending, let's say you deficit spend by $2 trillion. That means that somebody somewhere is getting $2 trillion more than the economy is producing on its own. So that is bullish because that $2 trillion is going to be spent. If you tried to balance the budget, you're taking $2 trillion out of aggregate demand. This becomes aggregate demand. We'll borrow the money from other people and we'll spend their savings today to get aggregate demand today. Well, that is good for real GDP. And I think the stock market is saying, yay, deficits, deficits, deficits. Who the hell cares? We get paid first. And that's true. Investors get paid first. So why not be long the market? If the government is going to spend more than the Biden administration, which it looks pretty much like they're on course to do at this early stage, if they're going to spend, well, great. All that money into the economy's got to go somewhere. It's got to go somewhere. It'll go in equities. So let's buy equities. And the bond market is saying, yeah, sure, but bonds suck. With that much debt, this is unsustainable. We're not in a debt crisis, but we are barreling towards a debt crisis, and no one seems to care. I think that's the narrative out there, not inflation expectations. I don't think inflation expectations matter. If you read Christopher Waller's speech from Monday, he's sort of on the same page. He doesn't really see that this will be inflationary. He says if there is a hit from tariffs, he is willing to look past it because it will be a one-time hit. Okay. What do you think of finance-specific LLMs? You've shown how powerful the major LLMs can be. I'm struggling to see the use case or differentiate these finance-specific LLMs. So am I. I mean, I can use, I'll give you the list here. I have Gemini and I have a subscription to that. I have Claude and I have a subscription to that. So I can use Opus. not just their basic model, but I can use Opus. I have a subscription to OpenAI, so I can use the reasoning models, the O3. I don't pay the $200 a month, so I can't use their O1, but I have that. I also use Manus AI. Thoroughly impressed. If you haven't used Manus AI, get on board. I also have Perplexity. I use Perplexity Labs, and I use DeepSeek, just the free version. I don't think I pay for DeepSeek, and then I try them all out. And I would say the ones I'm most impressed with are Manus and Gemini. Less impressed with OpenAI. It tends to fail. And when I give it some more difficult tasks or longer tasks, it tends to fail. It always echoes back with there's a problem with your computer connection. What do you mean a problem with my computer connection? You're not processing it on my computer. Come on. And there's no problem with my connection because I'm playing YouTube in behind and there's no problem. So you're lying to me. But I haven't even used the finance LLMs, and I'm getting some very sophisticated stuff done with the current LLMs. So yeah, I think in time these large LLMs will eat and gobble up all of these domain-specific ones. Either that, or they will subdivide into all of these. What is it when a cell separates into two? Is that mitosis? Osmosis? No, that's not osmosis. Is that mitosis? I think these will just, like cell division, will bloop, 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 bloop. We'll just start splitting into 2, then 4, then 8, and start splitting into smaller and smaller models on top of this one big core model. In the end, I think the bigger ones will probably be enough. Do you have any view on the application of Bayes' theorem for prediction and valuation? Well, all this is saying is that as new information comes up, you update your priors. That seems to make sense to me, right? So that, 2 years ago, I looked at OpenAI and I said, okay, well, it's a neat little tool, but it can't solve any of my real problems right now. A year ago, you look at it, you say, okay, well, it's getting better, but it's not enough to solve my problems. Today, wow. And you get some people saying, oh, I thought you said. Yeah. And as new information comes out, you update your probabilities. New information has come out, I update my we all do this, right? So yeah, I think it's valid. You should update your priors, your probabilities of this or that based on new information coming out. Let's say the Fed actually does cut. What would the effect of that be on equities and bonds in the current environment? Well, in complex systems, all you can do is make plausible cases. Is there a plausible scenario in which equities go up? Yeah. Is there a plausible scenario in which equities go down? Yeah. Right? Which one is it? Well, that's what makes a market. It's not clear cut. If it were clear cut, it would already be priced in. The market would already be telling you, where it's going to end up. It's not clear cut what would happen. Equities, long maturity bonds rise due to a lower discount rate, or long maturity bonds rise due to rising inflation expectations, higher yields, equities fall. Could be. It could be that the long end of the curve really goes up, which will kill small cap stocks. I don't know why small cap stocks were rallying today the way they were, outperforming large cap, while long bonds were selling off from what started out as a pretty good day. None of that makes sense. One of those markets are wrong. I don't know which market is wrong, whether it's the equity market that's wrong or the bond market that's wrong, but one of those two markets are wrong. And there is no arb play between them. You just, all you can do is diversify. I don't know if it's the former, then why short S&P. Well, you have to understand, if I said, I'm adding pepper to my chicken soup, would you then say, pepper, why are you eating pepper? I'm not eating pepper. I'm using pepper to spice my soup. I'm using it in combination with a bunch of other things to make the other things better. I am not just short the S&P and that's it, nothing else going on. He's short the S&P, that's it. It's within a larger context of everything else that I'm doing. I am net long beta. I'm just short on one that has volatility, and I'm long on another that has volatility. And if I structure the betas correctly, and I'm long and I'm short, do you know what I'm harvesting every single week when I roll over these options? Volatility, volatility, volatility. So I'm making money on the volatility. You have to look at what the ingredient is. Short SPY is an ingredient to my meal. It is not my meal. Actually, you know what? That's a pretty good analogy. Hang on, write that down. It's an ingredient to my meal. It is not my meal. Maybe that is a way to that everyone can understand. Oh, you're short S&P. How's that working out for you? It's working out great. It's working out great because I can isolate volatility. It is an ingredient in my meal. It is not my meal. Hey, let's all remember that. All right? One of your recent videos, let's see AI do that on the spot, come up with something like that. Let's see, that's what it can't do. It can't create a new, an analogy that's new and novel like that. Not on the spot. I mean, maybe if you prompt it, but if you prompt it well enough, you're basically telling it what you want it to say, right? But it couldn't do that. One of your recent videos about AI, you mentioned that we must get to know AI, not to be left behind in the marketplace. Are you referring to mastering AI tools? What AI knowledge should a non-technical person master? Well, I can see by the color of your initials here, you have the applied level. If you have the applied analysis, right, there is an AI for finance module that I'm adding to each week. Review the most recent video. It's about an hour long. And there I overlay the capabilities of the LLM and the capabilities of the human on Bloom's taxonomy. And I show you what you need to do. You need to climb the stairs of that taxonomy, which means you do need to learn the basics. And you do need to understand the basics and to be able to apply the basics. And then you begin to analyze and evaluate. Then you can't create unless you climb these stairs. So you need to be AI literate, right? So you better be able to use these tools. And the big skill in these LLMs is prompting, right? And understanding when you're going to use a reasoning one, when you're just going to use search. Just understand the different models, developing your prompting skills, figuring out how it helps you, not how it replaces you, but how it helps you. But you must still climb these stairs. Your job is to get to the higher cognitive domains and to get AI literate at the same time. How do you get here? The biggest skill is critical thinking, critical reasoning. This is still something LLMs have difficulty with. I have read recently more articles in financial news about the Japanese debt being a potential major issue, as it could also affect the U.S. market. Is that really a concern? Things like this aren't really a concern until they're a concern. Is it a plausible concern? Yes, it is. Is it a concern? No, it is not. It is a plausible concern right now, but the market doesn't really react to plausible concern. It is plausible until it's absolute. Is it an absolute concern right now? No, it's not. Is it on the list of things to say, yes. But is it on the list of things to go, not yet, right? Is the level of debt that most developed economies have a bigger concern than the trade war? Yes. The trade war makes it worse because the trade war, in the end, will lower global GDP. If you lower global GDP at the same tax rates, all government revenues, the sum of all government revenues are lower, which makes the sum of all debt worse, right? So you want a situation globally where you can have the highest level of growth. That's an environment in which you have the least amount of frictions. Tariffs introduce friction. I don't know much about ZQ, and you said you're long ZQ, hence you're expecting a rate cut, but I don't get it. But then you answer yourself down here. I just realized it's 100 minus R, which is true. As R decreases, price will increase. That's right. If you're expecting cuts, ZQ will increase because it's 100 minus R. How do we determine R change given 25 basis points? It's a flow through. It'll just change by 25 basis points. because it has no duration. So we don't have to worry about the percentage change. It has no duration. It will just, R is just the rate. If the rate is cut by 25 basis points, this goes up by 25 basis points. Canada is likely in the early stages of recession, according to a Bloomberg survey of economists. Experts surveyed predict output will shrink 1% annualized base at Q2, 0.1% Q3, which is technically considered a recession. Forecasters say unemployment will rise and exports will decline this year, and they expect inflation to rise above the Bank of Canada's target rate. Now, it seems kind of, you have a decreasing economic activity, increasing unemployment, and they expect inflation to rise. That's an unwarranted conclusion. As business and consumers pause decision-making, waiting for more clarity on the situation with the U.S., we have seen a slowdown in the housing market as well. None of that sounds inflationary to me. All of that sounds deflationary. If businesses are on the sidelines, if they're not investing, if economic activity drops and unemployment rises, which means fewer people are going home with paychecks, that's a hit to aggregate demand. Where's the inflation? How is that? How is any of that inflationary? It is an unwarranted conclusion. LLM models are really just algorithms. Yes? Feels like their current development has definitely hit a bottleneck. Well, when you say bottleneck, if you mean that the progression is towards a level of general intelligence and even sentience, then sure, it's hit a bottleneck. But if you think, well, no, it's code, it's just code, it's not biological, then that's not a bottleneck. So it could be that it is displaying a typical exponential function. If we think of Euler's constant, right, it looks like this. So that you may say, well, okay, this is where we were, and now it seems like we're doing this. I think we're still over here, really. Maybe the second derivative is changing. Maybe the second derivative is dropping, but I still think you have a long way to go before you get to this level. If there is something like AGI, it's not going to be this same thing. It's going to be a shift of the curve altogether, not just an extension of this. It's going to be a shift of the curve altogether. My sense is that this is happening because there's just less new data on the internet for training these models. That's what the free part is for, right? If you are using the free models and you do not turn off the sharing of the data, then your prompts and the language you use, right? That is your language. That's all the LLM cares about, is how is the language being used. Your prompt then becomes input. Everything you load into it, whether it be a video, whether it be a PDF, whether it be stuff you should not be loading in and stuff that it normally would not see. So it is not breaching copyright by taking a book it shouldn't have taken and incorporating it. It's just saying, look, we have these tokens. Somebody uploaded something we tokenized it. We don't know what the hell it is. We don't know. Now, Gemini has, 250 million users. ChatGPT has something like 500 million users. You start adding up all these users, you might have 2 billion users. And let's say that all they're doing is talking to it twice a day. That means you have 4 billion prompts being put in. And let's say only 10% of it are uploading something. That means you have 400 million new documents being uploaded every single day. Think about that. So no, I don't think they're near the end. I think parameters still continue to increase. We are expecting OpenAI's chat GPT-5 O models. What are we, 4, 6, 8 weeks away from that? Let's see if they have more than 1 trillion parameters, because that's where Gemini is right now, 1 trillion. The thinking is they'll come in around 1.3 to 1.4 trillion. That's huge, 30-40% increase. That's going to make that wicked, whackad, as they say in Boston. Major AI companies are taking their sweet time releasing new iterative models. It seems like both OpenAI and Meta pushed back their next-gen model launches multiple times now. ChatGPT did it because they wanted to work on the O series. They have the O1, the O3, the O4 Mini. They wanted to develop these, and they didn't want to call this a 5 because it was a distinctly different model altogether. This is a heavy reasoning model, whereas the 5, is the 5? I don't think so. No. So where's the 4.5? I don't think it is. No. This was a separate, such a distinctly different model that they just started a new series. So that's why they pushed it back, because they're working on something else. As far as Facebook goes, I don't know what to say there. I don't really see any direct link or clear path between these current models and the AGI that Sam Altman often talks about to me. I'm kind of with you on that. Emergence of AGI still feels pretty speculative. I'm with you on that. The application development of existing LLM models might be speeding up. I agree the development of the models themselves is actually slowing down and could easily get stuck pretty soon. Okay. I also believe that this type of AI, which as Dr. Mark said isn't truly intelligent, simply can't handle jobs that need real human interaction and emotional connection. And I think teaching minors in particular, teaching minors or teaching minors? I think that teaching in particular really relies on strong positive interaction between teachers and students. So while AI might up replacing many adult course instructors, I'd say the chance of K through 12 teachers being replaced are low. Oh, I agree. I think it's low. I think what you're going to see here is where typically you could have a class size of 20, you might now have a class size of 25 or 30. So I think it will help alleviate a teacher shortage. Also, get out of the Western world. Head over to the Middle East. Head over to Africa. Head over to South America, Latin America. Here, the availability of education K through 12 sometimes is lacking altogether, or is so far away that the children can't get there. Even in Latin America, the number of people who simply have a grade 4, grade 5, grade 6 education, grade 8 education, that's it. Because the economic reality is too stark. You need another income earner to get out there and start working, right? So to be able to do this at night, to be able to have a K through 12 tutor that you can have at your home, that you can access at any time, right? Really makes a difference globally. So while a middle class Western suburb in Middle City, USA, probably wouldn't see much change in the teacher roll count in K through 12. They will be able to handle larger class sizes without much loss of having that contact, only because the AI tutors within the class could probably do a lot. But here's the real potential when you move out of the Western world into other parts of the world where we take stuff like that for granted. To them, that is a luxury item. When you say that MicroStrategy's NAV is 1.6, is that market cap divided by Bitcoin holdings? That's taking all their Bitcoin holdings, the number of Bitcoin, and multiplying it by the price of Bitcoin, you'll get a market cap. They have a balance sheet that is full of BTC. If you took the BTC off and looked at their balance sheet, they really got nothing. Bitcoin dominates. That makes their balance sheet a financial balance sheet. For companies that typically have not operational balance sheets, but financial balance sheets, they typically trade at NAV or discounts to NAV. You look at GM's balance sheet, it is an operational balance sheet because the assets are primarily operational assets. So it can trade at a lot more than its book value per share because the operational assets produce cash flow. Bitcoin produces no cash flow. The software business for MicroStrategy produces no cash flow. So it is predominantly a financial balance sheet. Financial balance sheets, companies usually trade for their net asset value or a slight discount. The reason being, it's going to be difficult for me to reproduce Apple just by buying the same assets. It's going to be really difficult for me to reproduce GM just by buying the same assets. but I can reproduce MicroStrategy by buying the exact same assets. See that? I can reproduce any mortgage REIT by buying the exact same assets. There's nothing operational in the assets. They're just financial assets. I did it using its balance sheet to calculate NAV with the following adjustments. Use the market value for Bitcoin, which you do. Count the convertible debt as debt if it's out of the money, and equity if it's in the money, conservatively ignoring the value of convexity. All the debt right now is, all those calls are out of the money, which means that's real debt. With those numbers, I get a NAV of 106 per share, or an MNAV of 3.363. Oof. I don't think so. They have a market cap of, I forget how much. It's like if you multiply, just look at the market cap of MicroStrategy. That's the number of shares times the value of the shares. We're just looking at the market cap of the equity and what the equity's trading for. Not enterprise value. I'm not calculating enterprise value. I'm just calculating the value per share. And if you multiply the Bitcoin by the price and you multiply the share count by the price, look at the market cap difference between the two. It's about 1 point, well, today with the rally might make it 1.7. You know, it was up 15 bucks, 1.7, 1.8 maybe. That's a significant difference. Which of those would you consider more accurate and useful? Because you're going to set up a trade, long Bitcoin, short MicroStrategy, I think you want to set it up not in terms of enterprise value, but in terms of the market value of the stock, because you can't trade the whole enterprise. You can't short the whole enterprise. You can only short the stock. So I would look at it on a share basis. Okay, we'll switch over to YouTube now. Let's clear our screen. And I subscribe to Barron's. And they send me emails at regular times with all the headlines. Remember I said I don't think these tariffs are done? The last headline is the Trump administration is working on tariffs for copper, lumber. Let me see if I can find it. I'll read the whole thing to you here. Where are we? Trump administration is working on copper, lumber, drugs, and other tariffs. When they could take effect. The U.S. and China are at loggerheads over tariffs. Why a Trump chic haul is likely. Well, let's see what happens with that. But I don't know. I don't expect much on that. Tariffs are not done. We are not done. Why the market is rallying, I do not understand. Maybe I'm a dinosaur. Maybe I should ask AI. As if we are saying the Fed controls the yield curve, it cannot be that simple. Well, no, I'm not saying the Fed controls the yield curve. It controls the overnight rate, which means it controls the money market rate out to at least the 6 month. Heavy influence on the 1, and quite a bit of influence on the 2. But if you can lower those rates, you lower the financing cost for the U.S., which means you lower the deficit right away, because deficit includes the forecast. Or the deficit going forward, what includes the forecast for the interest expense. That does start helping reduce the deficit, which may have an influence on the long end of the curve. And the Fed can control the narrative about the long end of the curve by saying we are not seeing what everyone else thinks is going to happen. We're not seeing inflation. We're seeing a lot of disinflationary forces coming down the pike. A lot of disinflation. If they start talking like that, man, the long end of that curve is going to come down. Well, I shouldn't say it's going to come down. It might come down a bit based on that. But if we can get the short end down, money market rates down, so that as the government is financing its short-term debt, it's doing so at lower and lower and lower interest expense, that might start to work on the narrative that the deficit is shrinking, that the deficit isn't going to be that bad, right? When they cut back in September, they made it worse on the long end. No, well, they didn't make it worse on the long end. They, as your first statement says, they don't control the long end. They can influence it with what they say, but they don't control it. Isn't the inflation expectation the main driver now? No. I find myself a bit confused. Well, when I say no, I don't think it is. I keep hearing the conversation about, oh, well, tariffs are going to be inflationary, but Governor Waller's speech on Monday is saying, look, we're going to look through this tariff increase. It doesn't really last long. I gave that speech to ChatGPT for a different reason. I wasn't asking it to do anything about tariffs and inflation. I gave it to it for a different reason, and one of the counter arguments I got was that if we go back to the 2000 to the first Trump administration with the advent of tariffs, it was not a one-time hit. It did bleed through for a period of time, but really small compared to the size of the tariff. That they found that importers really absorbed quite a bit of those tariffs. So I find myself a bit confused about where in the business cycle we are. LLM it. Leading indicators seeming consistent with the overall market sentiment. Yep. I had this conversation today. Somebody said, well, how's the economy doing? I said, I don't know. If you look at at some general indicators, it seems to be doing okay. If you look at earnings, it seems to be doing okay. You look at some other indicators, not really doing that well. If you look at measures of job creation and earnings, where's the problem, right? You look at other things, sentiment, it's not doing that well. Anecdotally, it doesn't seem to be doing that well, but who the hell knows? It's so much uncertainty in the data, only because there's so many conflicting points. So you're right on that. I understand the importance of reading between the lines, but it feels like there's always a new reason being presented for why the economy might break down. Yeah, Given all this, what would be your advice on signals or indicators I should focus on? Well, I don't know. I guess I would back up one step and say, okay, well, you want to know what phase of the business cycle we're in. Why? Is it for academic reasons? It's just a purely academic exercise to see if you can line these things up. Maybe you're writing a report or something. Okay, well, then that's an interesting question. Is it for operational reasons? Then I would say, why? Markets spend most of their time going up. If your investment horizon is long enough, I wouldn't even worry about it. When the economy falls apart, the administration, the Treasury, the Fed, everybody jumps in to bail it out. So you got that going for you, right? So, if you have a long term horizon and you're wondering what phase of the business cycle we're in, I would say that is an irrelevant consideration for your investment decision. Buy the market and go away. And just buy it at regular intervals. Every 3 months, you're going to make an investment. You're going to buy the market. But who cares? Who cares what phase we're in at that point? And who cares if the market goes down? That just means the next time, every quarter when you put more money in, you buy the market, you're buying at lower prices. When it pays a dividend, those dividends collect, well, then you buy at lower prices. You will buy on the long-term trajectory. So I don't think it really matters what phase of the cycle we're in. CFAs can't be good at evaluating LLMs because they aren't engineers, so they have no idea how fast type tech can evolve given enough brain power. I reject that premise. CFAs can't be good at evaluating LLMs because they aren't engineers. How do you know they're not engineers? How do you know there's not an engineer out there with a CFA, or that there are CFAs out there with other degrees? You don't know that. You have to have a university degree to pursue the CFA, but you don't have to have a business degree to do it. I've met pharmacists that have a CFA. I've met biologists that have a CFA. I've met engineers that have a CFA. So that's not a true statement. And who cares if they can evaluate the LLM? I mean, who cares, right? All that matters is, can they use it? When I said that you have to move yourself to the cognitive domain of analysis and evaluation, that's evaluating the output of the LLM, not evaluating the LLM. When you test drive a car, most people don't know anything about an engine, but they do know how it feels when they drive it, how it feels when they turn the corner, the acceleration, the comfort. They can evaluate the experience of the car. They don't have to pop the hood and evaluate the engine and say, ooh, I don't know about these overhead cams here. Don't like that. I mean, we wouldn't expect that. They don't have to evaluate the LLM. So that first statement, I think is problematic. Open source Chinese models are on par, if not better, when it comes to video and images. Well, I use Manus AI, and it's really good, so I'm not going to push back on that. Advanced coding isn't going anywhere. Advanced coding. I think you mean software engineering. That's more of a design issue, not so much coding. But okay, I'll let you have it. These models are trained on advanced coding isn't going anywhere. Those models are trained on sloppy boot camp web dev code. I'm going to reject that statement. And are falling apart with anything even remotely complicated. I'm going to reject that statement too, for now. But for now, I'll accept that. But junior devs aren't needed anymore. Here I can agree. Okay, well. I think in whatever conclusions you get to, if these are your premises, I would say that your premises are faulty and your premises are more false than they are true, which means you cannot have a true and valid conclusion from this. If Ed wants to cut, may not be able to in any impactful way because it lost control along end of the curve. I don't know that I would say it lost control. I don't know that anybody on the FOMC would say, no, we had control of the long end. I think they would all state that we do not control the long end. We can say that the market, the narrative has shifted in the market such that the long end has been going up, but I don't know that the Fed would even remotely agree with that. I think they would say that your criticism is not relevant for the Fed because the Fed never claimed to control the long end of the curve. Rate cuts won't matter much if 10 and 30-year yields stay elevated due to persistent Treasury issuance, inflation risk, low demand. Well, there isn't low demand. All the auctions have bid to covers over 2. That is saying that for every dollar being auctioned off, there's bids for well over $2 for that $1. You float $10 billion of 10-year notes, there's over 22, 23, $24 billion of bids against that 10. That does not sound like low demand. The Fed is having permission to cut, but the market is basically saying, we don't trust your forward guidance anymore. No, I don't think they're saying that at all. I think they're saying we don't trust the fiscal situation. I think the long end of the curve is almost entirely a reflection of the fiscal situation, not the monetary situation. Also worth highlighting, when other countries come under fiscal stress, the U.S. is not under fiscal stress at all. They're often forced to liquidate reserves, gold, treasuries, whatever they can do to stabilize their economies. The U.S. is nowhere near there. We're already seeing signs of this in some Asian markets. That kind of selling pressure can push U.S. yields even higher, regardless of what the Fed does. The U.S. isn't immune from global capital flows. No, we did see that in 1998. We had a taste of that at that time. However, central bank responses have increased significantly. The amount of tactics that central banks have really increased, so that you can't look at something from 27 years ago and say the last time we had a crisis like this 27 years ago, here was the fallout, and then central banks came in to rescue a lot of stuff, to prop things up, to help save things. They're much faster and much quicker now than they were 27 years ago. These are not the central banks of 27 years ago. So, I don't know that I would run right to that, but let's just put things in perspective. The U.S. is nowhere near there. There is no debt crisis in the U.S. There's a path that they're on towards unsustainable levels of debt, on a path to that. They're not there. And it's not a crisis until they don't pay. There is, as long as people and investors are willing to lend them money, there is no crisis. The crisis comes when they cannot pay. And then you have a debt crisis. Right now, it's debt concern. But if you're a bond investor, where are you going to go? Where are you going to go? Let's see, that kind of stuff. Okay, got that. Quick question about how someone in my position can better leverage AI. I write full-time about various financial sectors, primarily tech and crypto, focusing on key news events and analyzing price action, which I consider one of my edges. AI still struggles to interpret chart data in real time without human input. So I see that as a unique advantage, for now. Over the past few months, I've been diving deeper into the world of AI and I started using tools like Claude for writing, Perplexity to stay current on trending topics, notebooks to summarize information. I especially love the podcast feature in notebooks. It's incredibly helpful when I'm out walking or running and want to understand a complex topic on the go. Do we have a question here? I already see that AI is playing a huge role in my field and it's only going to grow. This is true. While hallucinations are still an issue that require human oversight, that's true. We'd love to hear your thoughts on how I could push things further to maintain an edge. Well, I think you're doing the right things, right? You're surfing on the wave. That wave is only going to continue going, but you're already on that wave. You're already seeing how it can spark your creativity and your imagination. One thing I've noticed is that AI has significantly increased the amount of information I'm able to absorb, which has helped spark new ideas to write about. That used to be the hardest part for me. Look at that. Right? So you're already riding that wave. I would keep going. LLMs in a different context. I think models generally deflate the value of knowledge itself. Deflate the value of knowledge. What I mean is that an LLM response to a research question related to, let's say, trying to develop a financial model for a specific company might provide a comprehensive financial analysis instantly that a junior financial analyst could have produced in a couple of weeks, but the fact is the analysis will be cheapened and not be really useful in a decision downstream in the analysis. I don't see how that is a conclusion. I have to, for certain tasks I have to do secondary research. Secondary research means you see what's already been written about the topic. And you got to search. That's time consuming and adds no value. It's just something I got to do. It adds no value. It's like saying, well, I have to drive an hour to get somewhere. And while I'm driving, I can do no other task. So an autonomous vehicle can drive me and I can do other tasks. Would I then say, oh, that cheapens the value of driving? I would say it increases the value because now I'm not focused on doing that mundane task, which is driving from point A to point B. Driving there has to be done, but it adds no value to what I will do when I get to point B. So who cares how I get there? Right? So I got to search a whole bunch of journal articles and read. No, not this. Read this one. Maybe this. Okay, well, this one here is useful. Let me go to the bibliography and see if I can find, spider out from there and see if I can find other, that's hours upon hours upon hours of doing that. And then you got to read it. And as you're reading it, you're going, okay, I thought this would be useful. No, it's not. The abstract made me think that this is going to be useful. I read the conclusions because that's how I read academic papers. Abstract, go to the conclusion, and if you're interested, read the paper. But if you can get rid of it there, that's really easy. But that's all. That doesn't add any value to what I'm doing. I'm already an expert. I already know that, no, this is not it. No, this is not. This is it. Well, what if the tool could do it for me? And take 8 hours of searching and bring it down to 10 minutes and give me a bibliography. Right? All that searching added no value. Driving an hour to where I need to go added no value. I would say that these things add value to knowledge, not decrease the value of knowledge. I don't know that it would be cheapened. It would take out the administrative stuff that needs to be done that adds no value. What adds value is your ability to analyze and evaluate situations. You know, when I first started my PhD, I was very good at statistics. I knew exactly what had to be done. Here's my data set. I got to test it for assumptions. I know what tests I got to do for assumptions. And I had to use SPSS. And it was a different interface for SPSS when I started my PhD. And I said, look, I know what I want. I just don't know how to tell SPSS what I want. But I know what I want. And it was hours of searching for the right commands and then always second guessing, is this it? Is there a modifier I need to put in? So you're reading the manual and all of the rules and all of this. And it's like, oh God, I got to learn the tool before I get my output. Well, wouldn't it have been nice if I could have just typed in natural language, hey SPSS, this is what I want to do. And it did it for me, because all of that searching and learning SPSS added no value to my output. None whatsoever. We got rid of the abacus. We got rid of the typewriter. Remember a world of typewriters in the 70s? We got rid of the typewriter and the world moved on. Nobody said, oh, let's lament the lost skill of typewriting with carbon paper. Let's lament the lost skill of the abacus. If I could tell SPSS in natural language, I don't know that I would lament the lost skill of SPSS line instructions. I don't think I would lament that one bit, because I know what I want. It's the output that I want, but to get there, I got to drop everything I'm doing, and I got to learn what codes I need to tell SPSS to get the output I want, and God forbid I forget a modifier. Because now my output is like, this is not it. This is not what I'm looking for. Oh, God, I got to go back. How many hours I spent learning that interface and learning that tool and learning all the different lines of code. I wouldn't call it code. All the different instructions you got to put in to get what you want, when I knew what I wanted 8 hours ago. It would have, if there was an SPSS expert on the floor that when you were ready, you said, can you come here a second, tell SPSS this is what I want, and then they entered it in. It wouldn't have changed any of my output or any of the analysis of my output or the value of my output whatsoever. That administrative task was purely a waste of time. That's where the LLMs can come in. Remove all of those things that don't add value but have to be done to get to the destination. I can see text LLMs producing wonderful reports, videos, but what's actually downstream of that? I don't understand that. You're leaving me hanging. More reports, more novel poetry. I wouldn't think about it as more reports. Remember what I said earlier? I can do a chapter given a certain amount of resources and time, but now I can do a chapter. So I don't know that I'd say more reports. I think that I would say better reports, because the difference between 60% and 70% doesn't take a lot. If you're operating at, your output, if somebody is evaluating your output and say, I give this a 60%, for you to get to 70% is not a lot. But if your output's already at about 93% in terms of quality, however you measure quality, getting to 94 is a lot. Getting to 95's a lot. This will make getting from 90 to 95 the same as getting from 60 to 70. That if you could do it, why wouldn't you do it? So I think that it would not just increase the amount of output, but increase the quality of the top output. While this might increase productivity, I don't see how it will increase value. Well, I just gave you a plausible way that it could. I think the value will come more from large math models or large quant models. This is where AI can be applied in specific domains like biotech. Yeah. Have you seen inventory numbers for housing in the U.S.? I thought there was a shortage. There was. And the shortage still exists. But what you have is you have a certain amount of supply, which is below the level that you need based on household formation. However, you have no demand right now. So if you have no demand, it looks like you have a surplus, right? You have no demand because, well, housing prices haven't come down enough and interest rates are just a bit too high and there's a lot of uncertainty in the economy. So supply is greater than demand only because demand is depressed. But aggregate supply is less than what household formation would suggest that it should be. So that if rates dropped and mortgage rates went back to 3%, you would be back in an aggregate supply shortage. On your point about the I in AI, for many cases, whether the technology itself is intelligent doesn't necessarily matter. Yeah, I guess it doesn't matter. I mean, we could philosophically debate whether these are intelligent, and it wouldn't matter. I agree with that. I just seem to think that it is less controversial if we just drop intelligence and say, look, these are just emulators. They emulate a specific cognitive domain. When the models are used to capture real human knowledge, human, knowledge, do you mean real human knowledge or capture real knowledge, capture human knowledge, capture too many commas here, and disseminate it among the stakeholders, everybody wins. I agree. One of my clients is an AI tool. For large conferences, one of your clients is an AI tool? I need to unpack that. Transcribes sessions and generates personalized reports 30 minutes after each session. For organizers, it takes a bunch of analytics, tracks a bunch. At the end, there's a chatbot which attendees and all stakeholders can use to get the knowledge of the entire event. Until now, you'd have to rely on reporting done by journalists and consultants, essentially using their AI product. One of your clients is an AI company that has a tool that does this. Okay, I get it. I thought you said one of my clients is an AI tool. The real key knowledge of all speakers is gathered and stored. None is lost. Well, so, yeah, humans have knowledge output. The LLM doesn't have knowledge output. The LLM just aggregates all of that. When an LLM says, if you ask it, what is the structure of hydrogen? It'll tell you what the structure of hydrogen is. That is somebody else's embodied intelligence that went into that statement at some point. But that doesn't make the LLM intelligent. If somebody repeats a line to you, it has one electron, you would say, wow, you're intelligent. Are you? Or are you just repeating stuff you read somewhere, right? All knowledge is embedded intelligence. But repeating knowledge does not mean that you are displaying intelligence, right? Not trying to pitch anything, just offering a different perspective. Yes, LLMs can do all sorts of great things. Like if you're just asking it to summarize a bunch of stuff, it's really good at that because that's really just summarizing and repeating stuff it heard somewhere. It is not. If you had no attendees, and you ask the LLM to generate a conversation around an imagined conference, all it could do is repeat stuff that it already could probabilistically say. It couldn't create anything new. It could only repeat intelligence that is embodied in other statements in other places. How can one best use AI for macro-focused top-down trading, which avoids analyzing small balance sheet details? Wow, yeah. I mean, what you're asking is, how can I get AI to do something for me without me having to do all the work? The answer is it won't. For it to be of use to you, you must first be an expert on macro-focused top-down trading. You must be an expert in it, because if the LLM gave you something, how could you ever evaluate whether it was valid or not? You look at it, if you know nothing about macro-focused top-down trading, then anything, it could give you anything and you say, I'm going to go and do this. You're in no position to evaluate it, which means you must be a domain knowledge expert that then uses AI to eliminate a lot of the tedious tasks you would normally do. So how can this be used? by a macro-focused top-down trader to expand the universe of things they look at. So right now, given their cognitive bandwidth, they may look at a bunch of things. This will allow them to look at a wider group of things. But they must still be an expert. It's not as if I got an AI agent and I just hired myself a great macro trader, but that you know nothing about macro trading yourself. How do you know? How do you know that the stuff that it's telling you is even useful, right? So how can one best use AI? First, become an expert in the thing that you want to use AI on, and then you will see how you can become an expert in using these tools to increase your output, increase the quality of your output, increase the quantity of your output, increase the scope of the things that you include in what you do. I think there is a very, very big mistake being made out there that I don't need to do all the heavy lifting anymore. All the cognitive heavy lifting I don't need to do because AI will do it for me. No. AI will give you something, but it'll give everybody the same thing. Anybody can ask it and it'll give it. So you have no edge because you're in the fat part of the crowd. You must become an expert. So anybody thinking, oh, CFA, LLMs will replace financial analysts. No, they'll replace bad financial analysts, but not good financial analysts. How do you get to be a good financial analyst? You must first become a financial analyst. You can't skip the levels and say LLMs will do it for me. You must move to the higher cognitive domains, which means when you're doing level 1, it's not enough to say, hey, listen, I know this and I understand this and I can apply it. You're going to want a provider that pushes you to analyze, that pushes you to evaluate so that you learn critical reasoning and critical thinking skills right out of the gate. You don't wait till level 3 where you say, okay, well, I'm not understanding this. Because at level 3, you have to analyze, you have to evaluate. Well, it should be done at level 1. If the providers who are going to survive in the future are those who are going to migrate their content to the higher cognitive domains now, not in 2 years, now, you must still become an expert. It sounds like I'm a minister. What do you call those? A pastor, a priest, a evangelist, or something like that. Jesus came down from the mountain and he brought with him AI. I want to join Discord community of your channel. I'm preparing for level 1. How can I access it? You can't access it directly from here. You must go to markmeldrum.com. Let me write it out for you. M-A-R-K. It's my name, by the way. You should all know it. Meldrum.com. And you register for free. And there you will have the level 1 CFA content from 2018 for free. And from there, you can then join Discord. Right? You can't go from YouTube to Discord. You must go from YouTube to Mark Meldrum. Join it for free. Look at this. We're going to put that right in your way, and then you can come to Discord. That's the process. You think studying for the GMAT verbal section helped develop your critical thinking skills? No, I don't think so. No, not really, because, well, you had to have critical thinking skills to do well on the verbal section, because they did give you questions of the form if P then Q, and then came up with conclusions to see whether or not you were capable of using some logic to get. So some of the questions were along those lines. I think most of it was along the lines of grammar structure. So there was a lot on verb agreement and things like that. Listen, I took the last time I took the GMATs was 20 years ago, because heading into a PhD program, you needed the GMATs. By the way, I did a 720 on that out of a total of 800. I don't know if the GMATs are still scored the same way, but I was in the top 5th percentile on both the quantitative and the verbal side. But I don't recall if it helped me in my critical thinking skills or if I already had that. But now, keep in mind, when I wrote this, I already had a computer science undergrad behind me where you do learn a lot of logic. There's a whole course in logic statements. If P then Q, if P not Q, if not P then Q. It's a whole bunch of that stuff. P and Q, P or Q, tons of that. Not P and Q, not P or Q. Ugh, God, so maybe that helped me. Looking at your NVIDIA analysis, you identify a put strike at 112.50 was 18% down from today's price. That's a very conservative. That's saying, look, if they only do 450 in earnings and they trade as low as 25, I think we could all feel very comfortable buying them at 112.50. That doesn't, it's a good put strike if they ever, start selling off. You see 130, 125, pushing down to 120. Yeah, I'd probably sell the 112.50s. I sold 130 puts earlier this week. That's working out okay, but I sold 130 puts. 112, you can wait and wait and wait for it to get to 112. I think it's rightly priced where it is right now. I think I got $4 and change for the 130s. Anything that would put me around 125, 126, I'll own it there. I don't mind. This kind of sell-off doesn't seem unplausible for the broad U.S. equity market, and NVIDIA along with it, 18%. I don't know if that is even plausible anymore. When you're looking at selling puts for income in the current macro environment, do you change your usual approach in any way? I don't know that I changed my usual approach, although I may change the delta that I use. I may get more aggressive on the delta, depending on what the underlying is. I generally don't like selling puts on things that I don't mind owning, because I usually, when I sell a put, don't have any intention of closing it. Either it expires or it's assigned, but I usually have no intention of closing it. I'm going to take a sip of my soda here. I was at Walmart the other day, and I was so overjoyed to see that they now have Orange Crush Zero Sugar. Remember having an Orange Crush when you were a kid? How great it was? But Orange Crush is just full of sugar. This is now Zero Sugar Orange Crush. So I saw right beside it the soda. The pink soda. I don't know what it's called, not the cherry, but it's like I don't know what kind it is. But that wasn't diet. Mr. Mug now makes a diet root beer. Mr. Mug, I don't know if you knew that. They now make a diet root beer. I don't drink alcohol, so I got all the brands down of who makes a diet what. Where does one access the critical thinking in finance module? This is in AI for Finance, Applied Analysis. The Applied Analysis, you'll see AI for Finance. And the last entry is the beginning of the critical thinking series. It's going to be, critical thinking. Next week is critical thinking plus the use of AI. I'm going to show you a few other uses for AI for finance. And then it might just be AI straight. And then we'll go back to critical thinking, critical reasoning, maybe for a couple. Then it's back to AI. But the critical thinking is all for finance. All the examples, all the case studies, everything I use come from finance. And I try to infuse AI into it as much as possible to show where it can help us, where it can augment what it is that we're doing. So this week we're going to go through premises and conclusions, and then we're going to assess two individuals who made some premises and conclusions to see which ones are sound and valid. And then we're going to ask AI to do the same thing. Are we still short the rallies? Well, I wouldn't say short the rallies. I'm generally short and long. I've already explained that. Back in '87, heavily into machine learning and artificial intelligence. Had a Texas Instruments calculator, and all the intelligence on my resume was artificial. I don't get that. think your argument the Fed has to cut is one-sided. Yes, deflationary force of AI is in play, and interest cost is relatively high comparing with recent history, but not if we go back further. I think you might be confusing interest rate levels with interest cost. Interest cost as a percentage of both GDP and of government revenues has never been higher. The demand is not there for the long duration debt. Yes, it is. Investors are not willing to lend the U.S. more at this level of spending and no fiscal discipline. Yes, they are. If you look at the bid to cover, right? BID to cover. If you look at the bid to cover, they're all greater than 2. Meaning for every dollar the U.S. is auctioning off in treasuries, there's well over $2 of demand for every single dollar. 2.4, 2.3 is considered low. Some of these auctions go out with a bid to cover of over 3, meaning $3 are bidding for every $1. So the demand is not there. That is an incorrect premise. Investors are not willing to lend. That is an incorrect premise that is not borne out by the data. You talked about last summer cut. Well, they started to cut back then as they saw some weakness in job market, but the long end spiked. They were afraid of losing the long end, so they stopped. No, I reject that as well. This time around, they are afraid of the same problem, and the risk is even higher with all these tariff chaos. I really think they're focused on their dual mandate, price stability and full employment. I really think they're just focused on that. They are not focused on the long end. Now, are they aware of what's going on the long end? I'm sure they are, but that's not their concern. The long end going up is tightening of financial conditions. If anything, they should be more willing to cut the short end as the long end goes up, because almost all consumer credit is priced off the capital market, not the money market. So if the capital market curve, the 10-year, starts approaching 5%, the 20-year, the 30-year, 5.2, 5.3%, that is tightening monetary policy. Because, again, most debt is tied to the capital market. They would be more likely to cut the higher the long end of the curve goes. So at these elevated rates on the long end, it is tightening when they specifically wanted 100 basis points of loosening. Monetary policy, where it matters most, actually got tighter. So if anything, they're even more restrictive than they want to be. They should be cutting rates. AI will cause waves of layoffs in mid-term future. I don't know about waves, but I think where AI is going to hit first is lack of entry-level job positions. And that's the right time to cut because of the demand destruction associated with it. But my bet is they will cut prematurely and we will see a Liz Truss moment. No, not so much. You won't see that. What you had in the U.S. Or in the U.K. Was a cause and effect relationship in that the hedging, the 30-year was used for a particular type of hedging. And as rates started to go up, there had to be covering, which forced more and more and more covering because of the level of immunization that was used by pension funds. Immunization is heavily used in the UK. It's not that popular in the US. So you wouldn't have that particular cause and effect like that. So the structure of the financial market, the fact that many pension funds immunized using a short position, using futures, the fact that they did that created that problem. So I don't think that you're going to see that again. I don't think that you'd see it in the U.S. because it doesn't have the same financial structure. I think I might have misquoted a few things in there, but you get what I'm saying. Let's see. Still, though, I wouldn't short TLT. No, I don't think so. Altman literally said that AI will not replace search. Google search is up 10%. Google AI is also one of the best. Well, no, it's not going to replace search. It will be search. So I can search textually, blah, 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 and I get a bunch of URLs back. Or I can search contextually, which is what AI does. It searches for context, and then it gives me one answer without me having to click on all these URLs. However, if you, with Manus, you can click at the very bottom where there's the instruction line, there's a little window. You click on that, and this here will give you a view of Manus's computer, and you can see what it's doing. You know what it's doing? It's searching. Website, search, website, website, website. So search is up 10%, certainly is. AI, with the internet tool enabled, is doing a hell of a lot of searching. So it's true. Google's statement that search is up 10% is probably true. Apple's statement that browser search is down is probably true, because I do very few browser searches now. Everything I do is through AI, because I get the context. I don't have to click on link after link after link after everything. But when I ask the AI tool for something, it searches. So yeah, search is up, but human search is down. So both Apple and Google are correct. Apple is saying these browser searches by users are down. Google is saying, but search is up. Sure it is. The AI tool is searching for me, and I don't have to do it, so I'm not seeing the ads. And Perplexity is my search tool. OpenAI, Gemini, these are my search tools. I don't actually open a Google window now. I caught myself the other day opening a Google window. I was about to type it in going, what the hell am I doing? Why would I do this? And I went right back to the tools that I already pay for. I'm keen to hear your thoughts if it will be smart strategy to explore career opportunities in Saudi Arabia, Dubai, or India. Beats the hell out of me. I know nothing about those places, as these economies are undergoing capital deepening as well as total factor productivity. Oh, well, if you're pursuing finance-related jobs, you really have to worry about the level of financial sophistication of these markets. Not so much, there's capital deepening. So I don't know that that's the right thing to look at. I'm thinking to ride the boom, which is expected to continue at least 5 to 8 years. If you can share your views, given you did explore UAE as one of your asset locations, yeah, but not as an investor, as a tax refugee, And I looked at it for a period of time as a possible destination to leave Canada. I didn't look at it in any particular way, so I can't help you with that answer at all. If test prep is facing obsolescence, then you sure got out at a good time. Well, I think test prep as it is facing obsolescence unless it changes. I think there is no change for very structured tests, very standardized tests, SAT, GMAT, LSAT. I think these tests will stay around, MCATs, but all the providers, big one here is Princeton, right? Princeton Review. What do you need them for? What do you need to pay those dollars for? If you say to the LLM, I am studying for the GMAT, I have 4 months before I take it, give me a schedule. And give me the progression of what we're going to do. Then you take this when you say, design a study for me, and generate all the examples that I could use. It'll do it for you. It'll do all of these things for you. It can do it. It can do it all for you for $20 a month. What are you going to spend $5.99 for with a pass guarantee? Google will give you a pass guarantee. OpenAI will give you a pass guarantee. Yeah, sure. It's just $20 a month every time you use it, and you get to use it for so much more, right? So, what are you going to pay $500 for? Same with the SAT. Very, very standardized test. What are you going to pay a tutor for? Now, this will also allow people who never could have afforded tutors before or never afforded these to say, well, look, it's $20 a month. I really only need it for 2 months. It's $40, not $500, not $600, not $700. It's $40. That's the new standard for these very standardized tests, because they are very standardized. Here, I can't say, well, you really got to get to the higher cognitive domains. That's not really going to do anything. This is just a test of your aptitude aptitude for graduate studies. This is just a test for your aptitude for university. This is just a test of your aptitude for law school. It is not in itself the profession you're studying for. It's just a test of your aptitude. The LLM will destroy, I think, test prep and tutors in that industry in a couple of years. I think it'll just be a shadow of itself. I don't even think that I would even want to buy a company in that space based on, oh, we did this much in revenue this year. I don't care. In 2 years, that'll be almost nothing. They're shrinking. However, if you're studying for your profession, which is the CFA, which is the FRM, which is the CAIA, if you're studying for your profession, you must become a domain knowledge expert. There is no domain knowledge here. You already learned something, and this is going to test your aptitude for something. You've already learned something, and this will test your aptitude. These are just aptitude tests. But these are career preparers. They prepare you for a career. That probably is not going away. However, I would say that if you're a test prep provider in any of these spaces and you're not evolving with this technology, you will be dead, because I guarantee you one of your competitors right now is evolving. Right? I really need a church and a pulpit for this. I can hear myself and I'm thinking, okay, take it down a notch. Any thoughts on M2 money supply adding liquidity to the stock market and sending it way over new all-time highs? Money supply from where? M2 has always been increasing, usually in line with the level of nominal GDP. When the Fed starts cutting rates, what makes you think that M2 will increase when the Fed starts cutting rates? Why would M2 increase? I'm not getting that. They're still running off their balance sheet. They're not increasing it. Unless you mean when they start cutting rates, the returns on money market funds will start to drop. That'll squeeze some of the money out of money markets into the capital markets. Well, yeah, sure. But then we have to bring up the question of, well, where does that money belong? Does it belong to the bond market or does it belong to the equity market? It ran into money market funds because it's getting such a great return, but did it run there from the long end of the curve or did it run there from the equity market? And when it leaves, is it going to leave and go to the long end of the curve or is it going to go to the equity market? Nobody knows the answer to that, right? I think Google wins the AI race with Microsoft a close second. They are directly monetizing and integrating the cloud. They also have a superior model with direct ownership. I think you're right. I think Google wins not because it'll be the superior product, but just simply because it has great reach. Manus AI, I think, is on par with Gemini and better at it, better, especially in the deep research category. But it's not that well known. It doesn't have reach. It has to get reach. It doesn't have the reach that Google has. Right? So this was the technology fight in the 70s, VHS or Beta. Beta was the superior technology. VHS won because it was just widely available. Mac versus, or Apple at the time versus IBM standard. The Mac was the superior operating system. It was the superior hardware, but it lost because it was a closed architecture. Right? And it was a tightly married architecture between the software and the hardware. So you didn't have the explosion in the PC space like you had because you had a separation of the hardware and the software as long as everything was IBM compatible. Later on became Wintel compatible. You drove prices way down. It became the accepted technology, but it wasn't the superior technology. I don't know if the superior technology would win in this case if you don't have the reach. And I think you're saying it right here. Microsoft has the corporate world locked down, so they will benefit just from switching costs and familiarity. Companies are also very concerned with cybersecurity, which compounds the lockdown effect. Yeah, if you already have the eyeballs, you don't necessarily have to have the best tech. Every public facing job in Indonesia requires a degree. From air hostess to hotel reception, it's an incredible waste of money. Yeah, it sounds like it. Sometimes I think a lot of people themselves are just emulators. Yeah, that's a good one. Would you consider adding to Spotify? Most of what I do is visual. I mean, adding it to Spotify would lose when I say, okay, look, here we go, and I do this, and I make this arrow, and I do this kind of thing, or I make a curve, and I talk about this part of that would be lost on Spotify. You know, when I had a radio show, there's an old saying: graphs don't work well on radio. So don't hold up your graphs and say, you see here, graphs don't work well on radio. CFA level 1, now employed as an energy market analyst. We use the weekly commitment of traders in our analysis to better gauge the sentiment of the actual trend. The only problem is the time. The COT is always 1 week old. That's true. I believe, I don't know, but you might be able to pay for more up-to-date data. We're looking to create a proxy of this driver, maybe using the volumes of the most traded derivatives. Do you have any advice on how we can move? Not really. This is not my space at all. Not really. To do this, I really would have to understand the degree, and you really have to break it down, the degree of hedging versus speculative positions. I don't know. Could I get a pin? It would make my day. I don't know what that means. Can I get a pin? I looked around to see what you want me just to give you a pin, like as a reply. It escapes me. I don't know what that means. What's the last one here? Nice financial insight, but the Trump hate is getting old as fuck. It's not hate. It's getting old as fuck. Well, me too, right? But I'll tell you what. Here's the challenge I throw back to you. You tell me how you can develop a strategy for what you're going to do in the markets without considering the orange guy. Without considering that. You tell me how to get that done without bringing him into it. Now, they are terrible at their execution. On again, off again, on again, off again. You get this, you don't get that. You get this, you don't get that. I'll end the war on day one. No, you can't. Putin is my friend. No, he's not. She's my good friend. No, he's not. You know, like, I mean, it's such terrible execution. You don't have to say every single word the moment it comes into your head. He is volatility embodied. And if you're in these markets, you have to worry about return and volatility. He is pure volatility. You tell me how to get this done on a weekly basis without talking about the Orange King. Love to hear that. Other than just burying your head in the sand and singing his praises, or just ignoring him and talking about what? What? Well, we had this happen last week. Who knows why? We don't know. We have volatility. We don't know. I mean, you know, I think you could see where I'm going with this, is that if you are in these markets, if you are active in these markets, you cannot possibly ignore this guy, and it cannot possibly escape your attention that this administration's as dumb as a bag of hammers. It cannot possibly escape your attention. Unless, of course, you're just a tourist in these markets and you're a Trump fan and he can do no wrong. Then, sure, you're missing everything. You tell me how to get that done. And if there is a way, I'll give it a shot. But basically, I don't see a way around bringing him into the analysis, because basically every single day almost he is the analysis. I don't think the cameras were on him today, which means expect him to say something stupid tomorrow. He's got to get those cameras back on him. Well, that's the end of this